Yo, welcome ladies and gentlemen. What is happening? Stumpy, I think you should do that, bro. I think you should freestyle one of these beats. Yes, the music is pretty dark, to be fair. Given the current circumstances, market has done nothing. Right? Not much activity, but we'll have a conversation about that. We're going to give you the levels. We're going to give you the ranges. We're going to break down the psychology. We're going to put things into perspective. And then I'm going to let you guys roll on your day. Market is in bear territory for the first time in 2020. Okay, then. So that's the logic. Which leads to the question. Billy from Philly, what's happening? Answer the poll. How many of you think that the 50 EMA is going to hold from this point? Pinned to the top of the chat is a poll. I want to know your opinion if you think this range will hold itself. Will Bitcoin make another attempt to the upside? I'm hoping you can see the poll. Yeah, the poll should be there. Some may need to be updated again. Never mind. Mad love and respect to everyone passing through to tonight's live. If you are new, you know the usual routine. If you like what you see, be sure to subscribe. Why? Because we stream every single day, Tuesday, Wednesday, Thursday. We chuck a couple of videos on the Friday. We might do something on a Saturday. Then we bring the levels again in on a Sunday. I wouldn't want you guys to miss out because when Bitcoin moves, you know that I'm there. Up or down. No hiding. Up or down. We are there to see this mad, chaotic price action through and through. Welcome to Traders Reality, ladies and gentlemen. Let's have a conversation. What is Bitcoin preparing for? What can we make sense in the sense of, is Bitcoin going to move up? Is it going to move down? What's the story? We've yet to have the midweek reversal. Now, for the new guys passing through to the channel, when we say midweek reversal, we're making a reference to this cyclical play that we anticipate from the markets every single week. Okay? This is what it is. We've got the W formation at the start of the week. We get the rise level 1, retrace. Rise level 2, retrace. Rise level 3, peak formation. Then it drops and repeats the same process all the way down. Now, at this point of the week right here, which would the M formation would appear in crypto, is usually around Thursday, which is a midweek point for cryptocurrency, given that cryptocurrency trades 24/7. In Forex, this whole cycle is ideally based on a Monday to Friday. Usually what happens, okay, is they may start a cycle or a pattern might actually happen on a Wednesday. Okay, and then this will see us through till Monday, and then Monday will see us through to the end of the week on the Friday, where they will then start playing out the new cycle to the upside or to the downside, depending on where we are. But that's the narrative of this cyclical play. In other words, Bitcoin is scheduled to do something. All right, it's Thursday today, man. We haven't seen the midweek reversal. Something is brewing. Let's have a look at what's going on across the board to understand where traders are at. Now, if you remember, only a couple of days ago, we said that the market USDT chart had some previous pools of liquidity that it needed to come back into. And it did, which all that meant was traders took their money out of cryptocurrency, out of USDT or safety and put it into crypto. So they brought coins. All right. Now it's holding in this area here. Now let's just take it back a little bit. How far can this coin go? Or should I say, how far can this yield go? We do have this point in the chart as well, which, if we look at it from down here, could be a possibility. In other words, if traders are going to be running their money back into crypto and start buying coins, then we're going to see the USDT chart drop all the way down to a yield of 4.2%. All right? By that principle, we would anticipate Bitcoin to do the following. We would expect it to try and come up towards this imbalance in the chart right here. Now, the fact that Bitcoin has been delayed in actually moving higher could be a sign for something. All right? This manipulative play, building longs at lower prices, tapping the lows, coming away from those lows, manipulative plays up and down, making sense of what's going on, given that we are stuck in this boring range, is going to be a task in itself. At any moment, you could catch the trade to the upside or to the downside. There's no clear, definitive, directive move by the market maker. Okay? And when we see this compression of price, it's usually consistent with base building. They are accumulating. Now, whether you apply the Elliott wave theory, the Wyckoff theory, whatever theory it is that you decide to apply, they are building positions in this zone. And the only way that we can verify that they're doing that is by looking at the nature of the way they move price at certain points. For example, look at this spike lower here, okay? And then look at this spike right here. Look at this spike to the upside and they aggressively pull back, all right? And then you have this move down here as well. And then, of course, you've got this area here, and then you see the retrace back down. And then, of course, you've got this zone down here, and then you also have these little areas here as well. The purpose of me doing that is to help you understand how to profile the charts when you are looking to determine what is the likely outcome of price moving to each of these zones again. In other words, behind each of these areas here, ladies and gentlemen, is commitment by traders, all right? And we've got to try and get our money in good so that when they make their way towards those areas, we're already in a trade and we are closing our trades as we approach these areas. Why? Because when traders see price coming back to the same point that they had originally got in at and they were in a loss from, they have an option to either take their trade, cut the losses, or break even. And more traders who tried to get in at that point as well, that got caught out, will probably add to the position because they now think that price is going to continue higher. So in other words, price could actually spike up into a range and then pull back down aggressively again, which is why you always have to pay yourselves, ladies and gentlemen. Are we all on the same page so far, guys? Are we all on the same page? I just want to know who's with me tonight, man. Who we got in the room? We got Helen 8. We have the crypto investor, insider, MCAP dominance. I call it a percent. Yeah, I say it's a yield. Forgive me. It's the market cap dominance, but that's only because I'm always looking at the treasury yields themselves. So forgive me if I have made that reference. My bad. Okay. You invested in the wrong time. No, there's no problem there. Living la vida loca. What's happening? Take it easy. Tino the rapper. Far from it, bro. Oh, man, what's going on? Who else is in here? Alan, Mr. FTD, what's happening? SoulCal, what's good, bro? Sack Trades, Bella B, moderators, Alan, Mad Love, Pattern Watchers. Glad to have you all here yet again, ladies and gentlemen. Okay, Greece is here. Yasunigo, how you doing, man? Birmingham in the house. What's happening, Birmingham? What's good? Pump it, then dump to 30k, please. Why are people asking me? Why are people asking me? That's funny. Anyways, let's have a conversation, guys. So, Bitcoin. We're still in this range, and all of a sudden now, we are seeing price predictions. Bitcoin to 30k, Bitcoin to 50k, Bitcoin to 12k, Bitcoin to 0. At the end of the day, these points are irrelevant until each point is taken. All right? That's your concern. You are only interested if Bitcoin can move up to a certain point in the charts, ladies and gentlemen. And that being said, your goal exclusively is to be sure that you are in the right trade. So let's look at the range that we have right now. Yes, it's obvious. There is a big blue vector candle right here. This behavior here is where you need to be paying attention. Why? Because if they've had many opportunities at breaking price down lower, but they haven't. What's the story? Yeah? I mean, we've had volatility in the charts today. Dollar yen pulled back. Happy days. Gold has risen. Happy days. Yeah? S&P 500. Silly move to the upside. Why has it not happened with Bitcoin? This is exactly what happened yesterday. During the FOMC, dollar yen flew up. Bitcoin did nothing. Come Sydney session, Bitcoin moves up. Today, S&P 500 moves up beautifully. Bitcoin, with a coefficient of the S&P 500 as being a positive coefficient, even in the last however many sessions, okay, Bitcoin has yet to move. Are we going to see the same thing again? The reason why they're holding this range is because they're probably waiting for Sydney to turn up tonight so that they can then mark price up. Because that's exactly what they did last night. If you look at the range from the close of New York, okay, 10 o'clock, they pumped it up. Then, of course, they brought it back down again as standard. We have tonight and then tomorrow, where the liquidity in the marketplace will be high. There are no news announcements coming over the next day or so, other than anything on Twitter or anyone that says anything regarding cryptocurrency, anything like that, any influencers, whatever. Other than that, it's going to be a quiet session tomorrow, or we're going to get a run for profit. You see, in Forex, Friday is the one day where the markets will move their positions to a certain zone or build price to a certain point so that they can get ready to make the run on a Friday. If you go back in time, ladies and gentlemen, look at gold and look at dollar yen, all right? Just for demonstration here, go back and look at every single Friday and go back as far as you want and just look at how dollar yen and gold, okay, behaved on a Friday. Then do the same for Bitcoin and see if you can see a correlation between the way yen moves, dollar yen moves, and gold. You will find that Friday's always the profit-taking day. So, if Bitcoin is going to move higher, hypothetically, we would assume that the balance between dollar yen and Bitcoin, because whenever yen moves down, Bitcoin moves up. And whenever yen moves up, Bitcoin moves down. That's the disparity that we have noticed in the past few days. Okay? Now, if dollar yen is going to pull back, because believe me, she is screaming a retrace. Okay? If she does drop, I mean, it's going to take a little while for yen to drop back down towards the psychological ranges. Okay? That's one thing for sure. I mean, yen's psychological plays are, where are they? The psychological zones are all the way down here. So yen's psychological high is 117.87. Okay? Now, that is all the way down to here, nearly a 71 pip move. So that could be consistent with its average daily range in the charts. Okay? Now, with that being said, what is gold likely to achieve? If gold's going to come back up, that means Bitcoin, in principle, should be dropping. Because we saw that disparity. Bitcoin rises, gold drops. Gold rises, Bitcoin drops. Okay? So, when you're trying to establish what's moving in the markets, all right, these assets like gold, dollar yen, Bitcoin, and all the other assets across the board, they're only going to move until guys whose sentiment favors risk, the yields. Okay? There's not enough people in cryptocurrency to move cryptocurrency alone. All right? We're talking we need bigger players to step in. Those bigger players are dealing with bigger balances, and they need to be moving money. They can't move too much in one instance. They have to move it in segments. Now, when the sentiment across the board looks positive, as you can see, the treasury yields themselves, the 10-year is shifting up. That tells you that money seems to be coming into the marketplace. Why? Because they're not putting their money with the government. When this yield drops, it means that traders are feeling scared, which explains why gold rises up. So when you're coming to cryptocurrency, don't just make your decisions based on whether Bitcoin is moving up or down. All right? Base it on the narrative of how traders are feeling. So from the 7th of March all the way up to the 16th of March, a whole week of buying activity by the whole marketplace, because the government had to advertise a more of a lucrative option to invest with them. Traders were seeking alternative assets. Yeah? Just look at crude oil now. It's pulling back. Yeah? There's no safety anymore. They're not interested. They don't need to run to commodities. All right? FOMC has done its business. Now, of course, we do have a little bit of a W formation here. Could that prompt that they are likely to try and continue back up towards this point? Yeah? Copper futures, same story. Corn futures, pulling back. Wheat futures, all with this issue with Russia and what have you. Now that's taken a drop back down again. And again, of course, the S&P 500 just tells you that everyone is feeling optimistic for the time being. Okay? Back to Bitcoin. Bitcoin is like no other asset out there. Okay? If it's tradable, it's just an asset. It's a financial instrument for you to either hedge against risk, take advantage of volatility, do what you need to do when it comes to speculation. All right? So all I'm saying to you guys is when you do come to the charts, don't just blindly go into Bitcoin. Try and work out what's happening across the board. Yeah? Try and understand how is the flow of money going to be reaching assets. All right? Because imagine assets like this. This is a big box of assets. And then you have certain gatekeepers in principle that are going to tell you if those assets are going to receive the money. In other words, you've got the 10-year yields right here. Okay? You've got, for example, gold. Okay? And then, of course, you might have some other yields as well, like the 5-year, the 30-year bonds or what have you. All right? But just for an example, this is the money. All right? Money's coming into the yields. Now they have a choice. If it's coming into the yields and staying there, in other words, if the yields are dropping, that means they're not putting their money into riskier assets. So it's staying over here. But if the yields are rising, it means it's hitting the assets. So that's the best way for me to explain to you traders' sentiment. If gold, okay, is dropping, that would imply that traders are seeking riskier options because they feel optimistic. So they run to all of the liquidity asset points. All right, that's where they want to go. They want to get the risk. They want to risk on so they can make some money. When the reverse happens and everyone takes all their money out, yield will be rising. Yeah? And when yields are rising, traders are scared. When gold is rising, traders are seeking safer options. Okay? That's the best way for me to put that. So when you do come to the charts, take a look at other bigger asset classes which determine exactly people and traders' sentiment across the board. Are we all on the same page, ladies and gentlemen? Sorry if I've bored you to death with that. Are we all on the same page right here? Yes or no? Give me a few yeses. Give me a no's. Thanks for the food. No problem, bro. No problem. Yeah? Please show Flux, Kra, and Ill. Okay, then cool. Ape. What is this about Ape? Because very controlled because Bitcoin's the most volume. It has 86% less real volume on Sunday. Crazy. Yeah, that's true. But you know what you've got to understand as well? Cryptocurrency is knocking on the doors of conventionalism. All right? People are used to trading Monday to Friday. That's it. They don't trade on a Saturday. Trades that get opened on a Saturday are in the pre-market, and only the hedge funds and the bigger players have access to pre-markets overseas and what have you. Yeah, they don't get that access. You know, the average trader isn't getting that access. All right? So cryptocurrency is going to challenge that. You know? Wicked. Sebastian, no problem. What's this ape list? What's the ticker for this ape? Let's have a look. Ape USD, yeah? Let's have a look at this. Oh my days, what is that? Hold on. Oh, it's gone all the way back down. Is this the right coin we're looking at, yeah? Is it T? No. Ape USDT? No. No. Okay, so why is everyone all hyped about this coin? What's the story with it? Yeah? Of AMP token. What's happening with AMP? Let's have a look at AMP. Okay. Very choppy. Very choppy price action. I mean, as a coin to, I don't know, if you're going to hold this, then fine, but it's very choppy, very volatile. Look at these sharp moves. This is one thing as well, ladies and gentlemen, you've got to be cautious of when you're trading the altcoins as well. I found that all these wild moves that you see the altcoins do, when Bitcoin moves up only a small percentage, the altcoins start going crazy. Yeah? The only altcoin, in my opinion, that you should be paying attention to is Luna, which in essence is mimicking Bitcoin's price action itself. Okay, obviously now it's pulling back, but it's had more of a gain than what Bitcoin has done. Now, what's interesting is this, guys. Do I think that we're going to go into the Bitcoin dominance saga and the altcoins are all going to pull back? Because altcoins had a nice little day today, but Bitcoin hasn't done much. All right. If Luna's starting to pull back down, all right, could that imply that Bitcoin's going to start coming into play later on? Because it seems to be that every time Bitcoin moves up a certain percentage, Luna just runs for it. Bitcoin holds, Luna continues to run for it, then she retraces. So is this retrace consistent with the idea that Bitcoin dominance is going to come into play and the altcoins are going to drop? Could be, maybe, who knows? Ultimately, I don't care about Bitcoin dominance, altcoin dominance, okay? Some will say, well, you need to understand whether to trade or not to trade. Well, look, if something is dropping, we'll short it. If something is rising, we'll buy it. That is all you need to be considerate of. If you're going to be spending time trying to work out which sector has got more dominance to it, okay, what happens when we go into a markup phase or a bull market? Where's the dominance then? You know, if they're buying, they're buying. That is it. You know, this is true. If you don't take your profits from the altcoins, you are done. Finished. Yeah? You are finished if you don't literally pay yourself with the altcoins. All right? Let's have a look at Ethereum. This is what you want to see. You want to see this behavior by Ethereum. Here we go. 2 spots taken out already. Go and watch the previous streams. Last week's streams. Okay, from the 14th of... Well, this week's streams from the 14th of March. We would have had a conversation about this. Ethereum moving beautifully to the upside. Let's mark off the zones in the chart. Here we go. Here is our vector candle recovery point. And the thing is, ladies and gentlemen, Ethereum and Bitcoin haven't hardly moved in relation to their ADR. So Ethereum's moved up 622 pips. It normally moves 1,591 pips to the upside or to the downside. So the average daily range is the journey that price can take from its open based on the previous session high and low. Okay? And it helps you work out if there's going to be momentum picking up in any particular coin. So at the top of the blue box right here, you can see it says ADR 15918.13. Ignore the decimal, move it forward, and it's 1,591.8. Okay? Ignore the last digits, because it's not set exactly to the broker of Binance. It's set off MT4, all right? So it's only achieved half of the ADR itself. Can we assume that by the end of tonight, they're going to actually move closer into the ADR and start hitting at least 50 to 60% worth of the, more than 60% of the ADR? Maybe, maybe not. But the fact that they're containing price tells you something. Same for Bitcoin. Just look at the ADR for Bitcoin for a second. Bitcoin today expects a 23,048 pip move to the upside or to the downside. So from the open, you can see at most they came down and hit the 50% mark and pulled away. Yeah? Not the 50%, sorry. 6,653 pips. So it's just a quarter of the ADR. So not that much activity by Bitcoin. So today has been a tight day. You will know if you've got volatility in the charts, guys, if you mark off the ADRs, all right? And if you have an understanding of where price is likely to go, whether it's to the upside or to the downside, if you mark that off in the charts, then you'll have a good indication as to where you are, as to where the Bitcoin's going to move from one point to the next. Yeah? Doesn't principle say that the less it moves in a small range, supply and demand are at equilibrium? What do you translate as supply and demand? Okay? Is that what we tell ourselves? Because you remember, right, the market maker as liquidity provider, if he has the objective to move price higher, he knows that if he can get enough orders built in this area here, he's going to make people buy and sell in this zone as often as possible. All right, because traders are not patient. I mean, as it stands right now, ladies and gentlemen, there is the infamous, okay, bull flag being prepared for us. All right, thank you very much, Mr. Market Maker. You have got us a bull flag. That is wonderful. We spoke about this earlier on today. So traders are now looking at this and they are waiting for something to happen. All right? The market maker knows that traders are drawing this pattern. So he will do what he can to spike people out. Can you see the arrow hitting that point? People are setting orders on the assumed idea that it's going to break out. So whether you understand it to be a supply and demand, what is supply and demand? There are not enough traders out there with liquidity enough to supply a clean and smooth exchange in market making. There's only one provider of liquidity. That's the market maker. It's what he says goes. So for every price point that gets filled in the chart is because the market maker, as the liquidity provider to the platform that's offering you the utility to trade, he's initiating that exchange. He's containing price in this range. He knows if he's going to send it up here, he needs to get his best fill possible. If he's going to send it down here, he needs to get the best fill and the most concentrated amount of orders in a particular point so that when he does release price to the downside or to the upside, he's then going to be in the fattest position. Why? Because he would have convinced traders that it's going up, traders that it's going down. They'll set their liquidation points, whether they're going to be above here or below here. And he's going to tap each range depending on his objective in this area here. Are we all on the same page? Does that make sense? Yes, they don't account for what the MM dumps in the supply and demand stuff. Listen, supply and demand, in my opinion, from what I experience in the marketplace, there's supply and demand economically and in terms of retail. That is where you guys may be aware of the green jumper story, okay? Which I won't bore you to death with, all right? Do you want the green jumper story? Now, I know all the day ones are like, oh, Tino, man. Who wants the green jumper story? Who wants the green jumper story? Come on. I know you got 15 seconds to type if you've already typed. How many of you want the green jumper story? Yes. Wing Commander, what's good? 100%. Give it to me. All right. Green jumper story tells you this. Yes. Blame Mike. Supply and demand. It's a bit of a misconception, in my opinion. Okay? No, not again. Yes, green jumper. Hey, listen. Green jumper is important. All right? For the new guy that's passing through to the stream, okay? Thank you so much for passing through. If you are new, the idea of what I'm going to explain right now is going to help you understand how price moves, okay? In my opinion, and from what I've understood about market making, okay? We have Steve. Now, you know Steve, my friend Steve. He has a retail shop. He sells jumpers. Now, these jumpers come in 3 colors, green, yellow, and blue. It's usually red, green, or blue. But today we're going with green, yellow, and blue, right? He sells 5 of these jumpers each. So he's got a total of 15. He opens his shop. He waits for people to come in and buy his stuff. Then at the end of the day, he does a stock check. He finds he's got no green jumpers, 3 yellow jumpers, and he's got 5 blue jumpers. Supply and demand would dictate that the green jumpers is where he needs to stock up because he hasn't got enough supply for the demand. He's lost all of that. He's had all of those green jumpers taken from him. So supply and demand works in retail clothing industry as such. That's where it works. But in the marketplace, it can't work like that. Why? Because people assume that this is where traders, okay, at this point, agreed on the price, on a price point that said, sorry, we're not interested in sending price higher. So we're going to pull it back because we want to take some money. Supply and demand in the markets, okay, should be just supply and demand, but it's not because we're dealing with fear and greed. Yeah? Fear and greed can't talk to supply and demand. Supply and demand can only communicate to physical aspects, right? Green jumpers, more or less. How much do you need to match your supply? That's where it exists. When price spikes to the upside, it's not because there is a supply and there's no interest. You're saying to me the moon boy is now rational. He's not rational. He is irrational. They can only move it there because they have a supply. And the reason why they pull it back so aggressively is because the market maker has been consistent with building his shorts to the upside. Remember, people are buying, and the only way you can buy is when someone sells. So behind every transaction of a buy, there is a sell, and you can't have one without the other. Because if your buy is in a profit of $100, that means the sell is in a loss of $100, which is why I say to you, pay yourself the moment you get yourself a decent profit. Because it can flip back. You can be in $100 loss, and the market who provided you that position is going to be in $100 profit. So in order for you to understand points in the chart as to why they turn, is because if the market maker is building shorts to the upside, if he allows price to continue on in this area, that would mean he will receive an influx of orders in the order book by traders who believe it's going to continue to go higher. That won't fit right with Mr. Market Maker's positions. Why? Because if he continues to send it higher, the traders that got in at 50% of this move are now in a fat profit. They're going to start taking profits. Okay? And even the guys that got in at a quarter of this move, they're going to be two-thirds of the move. They're going to be thinking, you know what? I'm going to get ready and start closing this because price action is getting a bit fast. So if the market maker has been trying to go short all this time and then moves price so far up to the point where he's not going to have the liquidity down below to attack because they've all closed their positions off and he's got no liquidation points or margins to attack, how's that going to work? So the reason why price turns aggressively at certain points is because the market itself, the liquidity provider, has trapped the liquidity and found the balance in the sense where he's got traders believing that it could continue higher and he's got them committed. They're not all looking at getting out of the trades just yet because most of the positions have been opened in this area, and that is a sweet spot for him to bring price back down to attack the previous pools of liquidity. That, in my opinion, is the novelty of supply and demand. Let's look left again and put the same concept to test. Look at this move. Market maker is building his shorts to the upside whilst hitting the previous pools of liquidity to the left of the chart that have been going short. He's been going long. He's realizing a profit on those return, at the same time building shorts at a higher point, making the retail trader believe it's going higher. He then stalls in this area here. Retail traders thinking, what do I do? Do I move my stop? Do I add to it? It's going to retrace. It's a bull flag pattern. We're going to move to the upside the second it breaks out from it. Okay, then what happens? They do a little bit of a spike to the upside, then they snap it back down at speed, which is why I say to you, focus on the speed of candlesticks. The faster they move to a certain point, you know that's market maker behavior. The less time they take moving to a point, you know that the retail trader is trying to battle with the market maker and trying to work out which way he's going to go next. That is what you call consolidation. And during consolidation periods, you're likely to see patterns form. Zoom out and you get a clearer view of the whole bigger picture of what's going on in this zone right here. Now remember, this is the hour time frame. Roll onto the 4-hour time frame, you're going to see things a little bit different. We've got ourselves, which is a bit crazy right now, guys, because we've just been consolidating non-stop. Look at how many patterns have been forming in this structure. We've got the bigger pattern right here, okay? Then we have a smaller pattern in this zone, right? Then an M formation. I spoke about this last week. What I'm trying to say to you is this. In the pattern zones that we have, something is going to break. Something is going to happen, whether it's going to take a couple of days or it's going to be a few weeks. Bitcoin's going to do something. Given that there's talk of a recession, given that we've had this issue with inflation, given that there has been a war going off, given that there's regulation, you've got all sorts happening with cryptocurrency. I would say that we should give Bitcoin a round of applause to be able to withstand all of that madness and still be trading in a decent range. Would you agree? You know? Would you agree? You know? That's the basis of it all, ladies and gentlemen. All right? Not again. So the market maker can decide when to do it or buy or sell. I found most of the definitions that they are obliged to buy and sell at any time. Obligated. Yes, because the whole point of you coming to Binance, the whole point of you using all these exchanges is because you want to be able to buy and sell freely without the worry of no liquidity. Okay? That's what it is. Yeah? You want a free, cool, smooth moving marketplace. That's what the market maker agrees with the Binance and Bybit or any exchange provider. He says, okay, you want to guarantee a fair exchange and maintain trading volume because you transact on that volume. You charge people limit orders, market orders. Yeah? I mean, look at Bybit. They've adjusted their fees. They're starting to get more volume. Before, you would get paid to make limit orders. Now, you ain't getting paid, bro. That means their volume is starting to increase. Now they're missing out. If they're paying people, they're missing out. So liquidity providers obviously had a conversation with them. Come on, boys, you've stepped up now. It's time to stop being so charitable. Yeah? Look, agreed. However, it's like the market maker took this into consideration back in December. He knew all this news was coming. Listen, it's not that he knows all this news is coming for definite, okay? But there are people in places that know when things are going to happen shortly after they announce it, okay? So in other words, when the people in the know, that's when these guys start to find out. Why? Because everyone has a vested interest in these industries. Do you understand the impact that gold has? Yeah? Are you aware of the impact of the bonds, the S&P 500? You hear about it all the time. There's that CME website which tells you it's Insider, is it? Which tells you who's buying stock. All right? At the end of the day, all eyes on the S&P. Because I'd say 90% of the world's governments are invested in this bad boy right here. And if they're not invested in here, they're invested in futures markets, coin, crude oil, gold. They are invested. So it pays them to be in the know. And the same people that are running these marketplaces, exploiting Mr. Retail Trader, aka the pattern watchers, everyone else on YouTube, everywhere around the world, unless you are creating a liquidity source to an exchange, you are not a market maker. Okay? You need to provide liquidity. You're in a position to provide liquidity, then you are a market maker. But we're talking about a $2 trillion marketplace, ladies and gentlemen. All right? Look. $1.79 trillion marketplace. That's money going in and out, in and out. And when it comes to volume on an exchange, just remember on Binance doesn't provide you profit. You get the profit from the market maker liquidity provider. Binance wouldn't be in business if they had to pay everyone from their own pocket. That's why they charge fees. If they were going to take your physical money, they'll take a percentage of it because they share it with the liquidity provider. All right? But if Binance was going to pay you from its own pocket your your positions in profit, how long are they going to be in business for? That doesn't work. So, I hope that puts things into perspective. We've had a little bit of a different talk tonight, ladies and gentlemen. All right? But I hope that's put things into perspective. I've gone and chewed your ears off too much. But it's just helping you understand the basis of how this game sort of works, man. All right? Is Bitcoin going to go up? Is it going to go down? If you want definitive answers, chip away. You ain't going to find them here. But I'm going to help you understand and make the decision for yourself. Because that's what we want to be, yeah? We want to be traders, don't we? That's the game. I will do my hardest to help you guys fish for yourselves. All right? You can all sit on my boat, but you want your own boat now, and that's what we're here to do. Ladies and gentlemen, if you are new to the channel and you want access to these indicators, pinned to the top of the chat is the Traders Reality website. You can download them free of charge. They are yours, okay? And then make your way over to the Discord. Discord is sitting with 14,000 strong pattern watchers. Mad love and respect to every single one of you people. It has been a pleasure speaking to you tonight, ladies and gentlemen. Thank you so much for passing through. Again, be sure to like and subscribe, and I will catch up with you all tomorrow. Take care of yourselves. Peace.